Ever heard of target date funds and gotten confused about what they are and how they work? Well, today we're going to break that down. Welcome back to Roundup Save, everyone. Our goal with this channel is to demystify money and financial independence. A little history of target date funds. Target date funds have been around since the early 1990s, but didn't gain popularity until the mid to late 2000s when the Pension Protection Act was passed, which allowed for the auto-enrollment of target date funds into defined contribution plans and set the stage for QDIAs, which are qualified default investment alternatives. In the past, the default for contribution plans like 401ks and other retirement funds were money market funds, which basically don't earn any interest. But now, target date funds are becoming the default for retirement funds based on when someone expects to retire. So what are target date funds? Target date funds are a type of mutual fund that automatically adjusts their asset allocation based on a specific retirement date. According to Investopedia, this means that as you get closer to retirement, the fund will gradually shift its investments from being more aggressive, growth-oriented assets like stocks to more conservative, income-generating assets like bonds. So what do all the numbers mean? Target date funds are named by year, like Target 2045 Fund, and are based on the year you will retire. Note that most funds are in 5-year increments, so if I want to retire at the age of 65, I would need to choose either the Target 2060 Fund, or I could also choose the Target 2055 Fund. The 2055 Fund would assume retirement at 62 years, or the 2060 Fund would assume retirement at 67 years, based on when I was born, which was in 1993. Benefits of target date funds. So one of the main benefits of target date funds is their simplicity. Instead of having to choose and manage multiple investments on your own, a target date fund does the work for you. It's set up automatically to rebalance as you age. This can be especially helpful for those who are new to investing or don't have the time or expertise to create their own investment portfolio. Another advantage of target date funds is the diversification. Because a single fund holds a variety of assets, it can provide a level of diversification that may not be possible with individual investments like stocks. So this is more like buying index funds. This can help you reduce the overall risk of your investment portfolio. I think one of the biggest positive catalysts for target date funds has been the expense ratios. Over the past several years, the average expense ratio has been on the downward trend, falling from 0.91% in 2012 to 0.66% as of 2017. One of the main reasons for this trend is the fact that investors tend to prefer a less expensive alternative wherever it's offered. So what are some cons of some target date funds? Target date funds are not a one-size-fits-all solution. Every person's situation is different, and it's important to carefully consider your own retirement goals and risk tolerance when deciding whether a target date fund is right for you. Target date funds are set to a specific year that you plan to retire. They may not be the best option for people that want to retire earlier at age 30 or 35 or 40, because as you get closer to this age, the fund becomes more conservative. It really just depends on your risk tolerance. Target date funds are clearly underwhelming in terms of performance, but the reason is simple. It's because they're designed to always have to need to rebalance. So target date funds aren't built to act as like a one-stop retirement funding solution. They're just a tool to help people like you and me, investors, manage risk over time. So let's wrap up. That's it, everyone. My take on target date funds is that it's a great option for the average American who may be new to investing or thought they were investing, but instead their money was in a money market fund. However, if you have a higher risk tolerance or have different retirement goals than the average, target date funds may not be the best option for you. If you like content like this, please make sure to smash that subscribe button and like the channel to follow along. We so appreciate your support. See you next time on Roundup Save, and happy investing.